Yo, 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 what's going on, ladies and gentlemen? Okay, so today's masterclass session. If you go back to this week's schedule, it focuses on using the weekend structure to understand a false move. Okay? Now listen. I am not one to encourage traders to trade at the weekend. Yes, Bitcoin does move quite aggressively over the weekend, but what I'm trying to convey to you guys is if you are proficient in the hybrid system, but more importantly, if you are in line with your decisions and you know when to cut a trade, then trading the weekends are a good time for you to really take advantage of what could be developing into a false move. You see, you can profit from the false move as long as you are out of it before it starts to take fruition that the false move is going to play out. In other words, if you are going to go long in Bitcoin in this area here, and hypothetically this is Monday and they would have achieved the false move, then you would be out of your trade getting ready to run the opposite direction. So what I'm going to do is I'm going to give you a couple of things that you can use that are going to help you understand how to approach the weekends. Okay? So check this out. In front of you, you can see that this is the structure that you need to be aware of when it comes to the weekend. The first thing that you need to establish is you need to wait for the psychological levels to form. Okay? Because prior to that price action, okay, they're going to be moving price in a very tricky way. You might get a bit of a fluctuation in price, but you're not looking for those BS plays. You want to be looking for the time when the market is looking to form the first high and the first low at the start of a new trading week. Okay, the start of a new trading week is just as good as the start of a new monthly candle. Okay, it's the new week and it is the weekend. There's information that has been absorbed. Remember, the market maker will always be the liquidity provider. He has to make sure that he is continuously feeding the markets to the exchanges so that people can continuously place trades. The second thing you need to look for is the environment. Where have you come from in order for you to understand where you're likely to go next? The vectors. And then, of course, gaps in price, which is in relation to the vectors, but we're looking at specifically the imbalances, okay? So let's just go to the charts for a second. Now, you have heard me say in this week or so, last week, that it would be a good practice for you to actually go back in the chart and highlight what is going on from Friday night, okay? So this is Friday. The 3rd of June rolls out to be a Friday. So if you get up your calendars, you will see that Friday is the 3rd of June. This is where the UK session closes, all right? And then the New York session continues. So you've got here 8:30, 10. Sorry, this is when the New York session closes, sorry. All right, 9 o'clock, all right? And then you see this price action here. Look left, okay? So remember, go back to this slide. Wait for the psychological levels to form. Well, you're not going to do anything just yet. But what you're doing is you're taking into consideration the environment. Okay? Now, the reason why I have got it as wait for the psychological levels to form rather than looking at the environment first is because I want you to get into the discipline to wait for them to form. Because I don't want you to take trades before the psychological levels form. Yeah? Because you could get caught out. What if you decide to run shorts? And this stops you out. You're waiting for the psychological levels to form because this is where Mr. Market Maker is going to set the spread for the whole week. This gap right here, the high and the low, is where Mr. Market Maker establishes his narrative for the rest of the week. He builds his positions in this area. Okay? When you are establishing what's going to happen over the weekend in relation to the false move, you are going to be paying attention to where they have come from on Friday. So if we just look at what price action was doing on that Friday. So this is Friday. Asia marks price up to the upside right here, coming in from the US session on the Thursday. We see the midweek reversal going into the Asian session. Happy day. So like clockwork, we anticipated the reversal and it actually happened in Bitcoin. Happy days. Okay? Then Asia holds price and consolidates. And then going into Friday, they drop it all the way down and they are setting it up. Remember, Friday is going to be one of two things. They're either going to make a run for profit or they're going to base out. Now, this move to the downside, one would assume that they could be setting it up for the week after, okay? But at the same token, they have made a run for profit because they had come back and recovered the vector candles, okay? So this is how you're profiling the nature of what they're likely to do over the weekend. Then when you get this consolidation period right here, this is where you start paying attention to the vector candles. Now, this is on the 15-minute time frame. The smaller the time frame you go down to, the more understanding you're going to get about the vector candles themselves. Okay? Now look at the candlesticks. All you have seen is the Bitcoin has been dropping, and then it holds at this point. They tap the previous day's low, okay, from this point in the US session, sorry, the previous 2 days low, okay? So that was the days before, and then this was the day after, beforehand, sorry. And then they come away from it. The first thing that you want to be aware of is a green vector candle that is happening at the lows. That's the first thing you're looking for, all right? So write that down. First thing you want to see is the green vector candle. One green vector. That's all you... Oh, goodness. One green vector. That is all you are looking for. Why? Because it's a stop in the move to what they were doing beforehand. See, this green vector candle here is no good for me because it's acting as a stopping volume candle, as you can see right there. That's no good for me. Just look at this behavior here. Retail trader stepping in. Mr. Market Maker comes in and makes them pay the price. Then he holds the zone with this strong green vector. If you had just placed a long on simply that principle, you would have seen a fat return. But that's not what I want you to do. I don't want you to just place a long or a short on any vector candle. You have to understand where you are placing it. So this is the clue. Okay? This here is the clue that things are going to change. What are you then requesting? You are then looking for more vectors and then taking those vectors in relation to the environment that you are coming from. So the next set of vectors, this big green one right here. Now this was at 4:45 on the Saturday. Okay? Bitcoin hasn't really gone anywhere in this range. So if we actually take the absolute high just before the psychological range formation, you can see that it's not actually gone anywhere. You're going to be pretty frustrated as a trader if you're in a long and it goes up and you're anticipating more movement. Then it comes back down into your position. You think, fuck it, I'm going to close it. And then all of a sudden it shoots up and you say to yourself, why didn't I take advantage of that? Why did I hold my trade? Why did I not do that? So when you start seeing this intention right here, it's an indication that things are probably going to change, favoring the upside. Look left. You can see the structure. They have come up towards this point. Look at how this candlestick right here doesn't actually go above into the red vector candle range. Okay? Because they know at this point they can get price higher by inducing traders to believe that this is the point where we can take advantage of traders going long. So we are in essence rolling in line with Mr. Market Maker because he has been going long to the downside and he now wants to get his longs closed up in a profit, and he's going to use the weekend to build his position all below the key 30,000 zone. So we highlight the whole and half numbers whenever we are coming into Friday, Saturday trading. Okay? Just look at the structure. Look left, building the longs at lower points, building the longs at lower points, building the longs. There are more longs being built than there are shorts. Now you might be saying here, well, Tino, what if they're actually building shorts in this zone? But what you've got to understand is if they've already exhausted the market enough anyway. And this is the truth of trading. You can't escape the fact that they could actually go down lower. This is where you are formulating a high probability trade. And whether it plays out or not is a different story. You are taking the idea that the vector candle that firstly appears here, given that they have been selling off aggressively, and when they came towards the lows down here, they didn't follow through. That tells you that they're not interested in lower prices just yet. Just look at how they recovered that wick on the vector candle right there. They came back and recovered it to the T, ladies and gentlemen. Look at that. It's phenomenal. They then come back up, bring it back down, and then the first green vector candle that appears is the clue. Then we roll into the formation of the first high and the first low. This is when you get to where you have to start paying attention. It's in this area here where you're going to understand if they are going to move away from this zone. Now, just look at how they behaved in this area. Lots of red vector candles coming down. They were always going to come back into this vector candle point. So you'd be looking at this and saying to yourself, okay, Tino, I believe they're going to come back down to this point. When would you ideally be going long at this range? Well, then you start looking at the candlesticks again, and then you start diving closer. Take into consideration the narrative that this could have been also a nice little W formation. So we have our structure right here. Happy days. We then dive in more and we say, okay, look, 1 vector candle, 2 vector candles, 3 vector candles, stopping volume candle right there. So even if you do come to the charts at 10:30 in the morning on the Sunday, okay, you would then say to yourself, I see a blue stopping volume candle right here. You go back in the chart and say, okay, what's the vector candle principle saying to me? Where have we come from? Where are we likely to go? What is my structure? Any whole numbers, half numbers? What are they actually looking at doing? What is price doing more of and not following through with it? If they have been marking price down lower, do I expect them to move down lower? Well, what do I need to see? I need to see them break beyond this structure right here, which is the 29,284. If they're not going to go for that, then I'm going to set my narrative up to favor higher prices. Okay? They gave retail traders the idea that it was going to go down lower, but they didn't, because look, the speed of the candles, look at how they form. They have broken down lower, but they haven't really gone anywhere. They've only come back into previous vector points, vector point 1, vector point 2. What's left? There's nothing else in this zone. So then we say to ourselves, we need to wait and see if price can get above a moving average. Where's the proof? Right here. First green vector candle that goes above the 50 EMA. You wouldn't have used this one because this candlestick was flat. In other words, the 50 EMA was flat. This is where you look for that. You look for it when the deviation of price away from a moving average happens, so that when it comes back into the moving average, you'll know that 50 hasn't gone to price. Price has gone to 50, which tells us that the momentum is still present. Okay? Now, the momentum could be present to the downside and the momentum could be present to the upside. But which one is it? Well, this is where the stopping volume candles come in. Look at where you are in the time of day. Okay? This is on a Sunday morning. They've already aggressively tried to break down price, but they didn't follow through with anything, and they only come back to the previous vectors. You've got the structure of a W formation right here. You can see that they are favoring higher prices because of how aggressively they are hitting the highs. They're not hitting the lows as aggressively. Every time they hit the lows, there is a reversal. But look at the highs that they are going for. The green vector pushes 1, this one 2, this one 3, this one, not so much this one. But what I'm saying is the pushes of candlesticks to the upside was giving you the clue that they were getting ready to break out higher. And naturally, you are expecting them to move higher because they are pushing price up aggressively and snapping it back down. Look how long it's taking them to go down lower. What took them 1 candle, 2 candles to achieve a move from 29,531 all the way up towards 29,997? Okay, so a good $400-500 move. Okay, took them 1, 2, 3, 4, 5, 6, 7, 8. Took them 2 hours to do that. Whereas it took them half an hour to do this. That tells you that they want higher prices because that's where the liquidity is. So then they have to make it go down lower to give the guys the belief that it's going to go down lower so that they can shake them out and shift out higher. Okay? I hope that makes sense. And then you can see what happens. It shifts out of the zone. Look left, environment, sending price to the previous point in the chart where they had aggressively sold from and got traders to believe it was going higher, selling into premium. Let's look at another example. Okay, so here's another example. This was the psychological levels that were formed on the 28th of May. Okay? This was the high, this was the low. First high, first low. Happy days. If you go to this video, it's exactly right there. So if we go look, this is on the 1 hour time frame, and we actually look at that, you can see on this chart, it's exactly the same story. Okay? Now, what's important about this? Let's take what we've just discussed. Okay? So we've got Friday right here. Friday initiates the drop to the downside. So I'm going to go into a smaller time frame and bring it back over. Friday, New York session. They drop price, come back down to recover certain spots, the vector candle zone right there. First green vector candle that appears is an indication that things may start to change. There's that first green vector again. They then move price down lower, come back and recover that green vector candle in that zone right here. Now you've got the day's low and the previous day's low right there at that point in time. And you're saying to yourself, okay, how likely are they going to try and move higher? So then you're starting to wait. You need to wait because look, it took them 15 minutes, half an hour to spike up. And this was in the New York session. So you wait for more information. Green vectors starting to appear. Happy days. Now this was going into Saturday. Happy days. All right. Then we see more green vectors formulating. So we know that we are going to see higher price movement. Okay. Because we can see that there is a buildup of vectors approaching in our zone. We look left and we know what the environment is saying because they have been marking price down lower. They want higher prices because they have been hitting price once, twice, aggressively in this zone. So we know that there's liquidity for them to come back up to because this is where they're going short from by selling traders into premium. Once you then see this influx of vectors happening over the weekend, you then prepare yourself and say, look, if they're going to break higher, I can look left and say, right, look, there's nothing happening. There's not really any vectors. Yes, there is a wick down there, but they had every chance to go down to that wick, but they didn't take it. Fine. My narrative is I believe prices are going to rise up. Then once the first high and the first low form, you will then be waiting for them to formulate the play out from this development right here. This area here is the proof of the move. Once the first high and first low is established, this is where you are looking for the presence of vectors to come in. The more aggressive that they come away from the psychological low and the psychological high, the more information you're going to get about what they're trying to do. So if we remove this and get rid of this, and we just mark off zones in the chart that they could return to at one instance, you can see that they're trying to spike higher from this point here and this point right here. The principle of them recovering back to the wick, even if you were to go long from this candlestick right here, you would have seen a nice little return upwards. Once they formulate the high and the low for the psychological areas, you are waiting for an expansion away from the psychological zone. The second you get that expansion away from it, this is where you wait. And you wait for the rise, the retrace, the continuation. Because look at what's happened here. The candlesticks that formed in this area here, the moving averages were flat. And this is on the 15-minute time frame. So there's no expansion, just contraction. But when you are looking at the contraction aspect of things, you are saying to yourself, okay, if the moving averages are contracting, I'm expecting some volatility to happen. They've been marking price down anyway. So if they're going to go lower, they're going to break the ranges. Are there any vector candles for them to come back into? Just look at the green vectors. They have all come back to this point. Look, this one here religiously comes back into that point right there, ladies and gentlemen. Let me zoom in. Look how they come back to that vector candle right there. It's phenomenal, isn't it? Look how they come back to that vector candle like clockwork. Then, once you've seen them violate any of the psychological ranges, once the first high and low is formed, There has to be a clean break away from them. A retest back into them is where the proof of the move is going to play out to fulfill the idea that they're going to move in the narrative that you are favoring. In this instance, higher prices. You can see that they had made the move to the first high to the first low. Then they consolidated. Moving averages contracting. Stop hunt rise. They bring it back. Violet vector candle would have been the clue that they were going to come back towards that point. And the fact that they couldn't break below the 5 and the 13 and the 50 EMA on the 50-minute time frame with no presence of vector candles in this zone tells you that things might be changing. The blue vector was one of the clues that would lead you to believe it's going to start moving higher. So they encourage traders to step in and push. So traders are now coming into the charts. Okay, this is at 11 o'clock in the morning, 29th of May, 11 a.m. would be a Sunday morning. Okay. And then you see the big aggressive move out of the zone. Happy days. Bitcoin taps that zone right there. We were talking about this only at that time, guys. So if you go back in the Patreon and look for videos on the 28th, we were discussing this. Okay. If we'll go to it right now, you'll see. Wait there. Okay, so here's the video. Listen to this for a little bit and you'll understand what I'm trying to say. A Saturday. Oh my goodness. How crazy is that? What a guy. Can you believe I just did that? Good morning, guys. Here. And I'll be going into it very shortly. Here we go. Each of these boxes represent a Saturday in cryptocurrency. Just notice what happens. So in this instance, we've had the move on the Friday, price collapses to the downside, and then Saturday brings a drift back up for them to only come back up onto the Sunday, which then leads price to move out. So remember that this is what we're talking about. We're talking about this area here and how I said to you to go back in the chart and pull up all the Saturdays in the chart to understand how they perform on a Saturday. Let's go over here. This is a Saturday. Price opens there, 14th of May, comes all the way down, comes back up into the range, taps that previous red vector candle with ultimate precision. Right there. Okay? Let's go back again. Another Saturday. Okay. So it was just in those few moments where I start talking about the idea of making a decision to trade certain times of day in the weekends. Okay? But I dive into the understanding of why you should wait until the psychological levels are formed so that you can work out what they're trying to do next. Okay? Now, going back into what we just did in this example, the principle is exactly the same over here. Okay? The weekend on the psychological ranges. They come from an environment dropping price. They've recovered the vector candles. They obtain the imbalances, the gaps. These are the gaps that we're talking about up here. Look, gaps in price, vectors, imbalances. These are the zones. Okay? So if you were to take a mental snapshot of what to expect over the weekend, you would do this. You would anticipate the following. This is the structure of price action that you would want to see. For price going down, because that's the market that we are in now, you would be expecting drops to the downside, okay, as the first instance. Remember, this is where the psychological ranges will start to form. So hypothetically, we would say that this is the high and this is the low, okay, the first high and the first low. What you are waiting for in this area here, ladies and gentlemen, okay, just before those open, is you are waiting for vector candles to appear in this area. So you're looking for green vectors that appear here. You're looking for green vectors to appear here and here, okay? Here is where the red vector candles are, which are the points of interest in the chart that you are going to be trading into, okay? You also need to be mindful of how long it's taking them to move price out of this range. So if you do see price spike up to only come back down, that's the clue that they are looking to try and mark price higher because they are finished with building their longs to the downside. This is the structure that you're looking for, okay? You're looking for the presence of vectors to appear at certain points in the chart to give you the indication that things are going to change against the narrative that they are trying to install to the retail trader. Remember that. You're looking for them, how quick they are moving to one zone against the next. Remember, it took them 30 minutes to move that high and took them over an hour, over an hour to get down into this area. Well, hold on a second, Mr. Market Maker. If you're going to move price down aggressively, why is it taking you an hour to get down with these two big red vector candles, whereas it's taking you only 30 minutes to actually come and recover a $500 move? Okay? From that high, from 29,810 all the way down to 29,529, that's about a $300-400 move. It's near enough the same. But it takes longer. That means it's controlled. And that means that that's where the stopping volume candle shows precedence. That's where the proof of it happens. That's a stopping volume candle. That's a stopping volume candle. They are highlighting that they are getting ready to change. Because at this point in time, they are exhausting traders' beliefs into the idea it's going lower. Okay? Now, when you get a psychological range, ladies and gentlemen, back into here, the first thing that you are looking for is you're looking for the first break away from the psychological range. Okay? The first break away, whether it's to the upside or to the downside. Okay? Remember, the downside or the upside movement. So in this instance right here, you can see that the first attempt away from the psychological range happened here. Okay? But look, once, twice, third time they broke into it, they retraced back up into it, but they were only coming back down into it because of the vector candle points. Okay? So the first break on the psychological ranges is probably going to be the fake one. Okay? Wait for the consolidation. It's if they break lower into the psychological range, you are waiting for stopping volume candles. You are waiting for long red vector candles to appear, but not actually gain ground. Look left to make sure that they are looking to recover other vector candles in the zone. Okay? Focus on how long the candlesticks are taking to break beyond the psychological ranges. Okay? Because if you do get them coming away from the psychological ranges to come back up and test into it and fail, then you'll understand that they're looking to trade away from the psychological low. Likewise, the same with the psychological high. You are looking for them to break out of the range, to come back into it, to test it, to move away from the zone. Go back up into the chart and you'll see exactly that. Here's the psychological high, psychological low. The first break to the downside takes that zone. Does it really recover anything? Yep, it takes out this vector, takes out this vector candle. What are we waiting for them to do? We're waiting for the confirmation of the move. They come back up into the vector candle. They drop back down again. We see them formulating a couple of pin bars right here. So we are now waiting for the proof of them actually following through with the move down lower. We don't get it. We get a green vector candle. That's the clue that things could actually change. We wait for another presence of a vector. Can we see them coming back up into this point right here? Price closing above the 50, the 200, the 5 and 13 EMA. Whatever it is you use to confirm that you believe it's going to go higher, you take it. But that's exactly what had happened here. Okay? And then they make their way towards the psychological high because they've been coming back into this previous green violet vector candle zone and tapping into previous areas that they had trapped traders with the belief it was going to go higher for them to get their shorts filled at the highest possible point because they were selling at a premium, which then led price to go back up into the red vector candle zone. That, ladies and gentlemen, is in principle the anatomy of how you should aim to try and trade over the weekends. I hope this video has served. Yes, I do like Dragon Force, so sorry about that. But please watch this video again and take a screenshot of this. Okay? Take a screenshot of this structure. This is going to help you understand what to be aware of. Environment to the left. Okay? I'll mark it off for you. Environment. Environment is over here. Okay? Oh, God, Tino. That's your environment, okay? You're now looking for vector presence. Vector presence. In these zones, all these zones, okay? You are looking for speed. Speed of candles, all right? You're looking for fake breakouts on the psi ranges. Okay? Stick to the patterns. Want vector candles in these zones. Okay? I hope you've enjoyed this video, guys. Mad love and respect. and I'll be checking in with you later on. Peace.